Welcome to Crescat's live market call featuring our macro and activist mining research. I'm Kevin Smith, Crescat's founder and chief investment officer. Before we get started, please refer to our important disclosures pages on the screen now. These can also be found in the description on Crescat's YouTube channel and on our website. Crescat's live market call is about sharing timely macro and newsworthy geologic updates, both positive and the negative news across our holdings as they arise. These videos represent the opinions of Crescat as a mining and exploration industry advocate. Our objective is to share the overall geologic progress of our activist strategy in creating new economic metal deposits in viable mining jurisdictions around the world. These securities discussed herein do not represent an entire portfolio and in aggregate may only represent a small percentage of a strategy's holdings. The issuers discussed may or may not be held in Crescat's client portfolios at any given time. This video is not intended to be, nor should it be construed as an offer to sell or a solicitation of an offer to buy any security. If you enjoy our videos, please click on the like button and make sure you're subscribed to our YouTube channel to get notified of upcoming episodes. You can also follow Crescat Capital on Twitter for ongoing macro research and important news updates on our activist metals positions. If you want to learn more about our investment strategies, we encourage you to reach out to Merrick Iwahashi. His contact information is on the screen now and can also be found on our website at crescat.net. So let's get started. Folks, the great rotation we think has finally started, and it's amazing because a lot of the news media has been using the word great rotation. You know, you'll remember we coined this thing a few years ago, and we've been waiting for it to unfold. We saw a glimpse of it, certainly throughout 2022, but the bigger rotation has yet to unfold, and yet we really do think it's starting to. One of the biggest drivers here is that we are in a technology bubble, and this is a good chart from BofA Global Research that just shows when we have these different manias, that get investors super excited about a technology, whether it's railway mania in the 1800s, the telecom and tech bubble in the early 2000s, the shale revolution. Remember that back in 2014 and 2015. Yes, these things do, create excitement and investor momentum and piling into stocks. They create fundamental growth, and especially they create CapEx booms in spending on these various industries and technologies. And but what does it almost always end up in? It ends up in a bubble that bursts. And the fundamental reason for the bursting of these bubbles, it's not that these things aren't, phenomenal technological revolutions. They are. It's that there's an unsustainable burst in spending that is simply not sustainable. And these are the lead ups to cyclical peaks in the economy, in the markets, that usually unwind in significant market downturns and recessions. This is one of the biggest we've had. We've been saying it for a while. I think we've finally seen what it looks like when it starts to roll over, and it has only started to roll over. Let's go on to the next. This is looking at a similar phenomenon with these other market tops in the past, when you have a narrow leadership group late in a cycle, and this is comparing the S&P 500 versus the S&P 500 equal weight on a rolling 2-year correlation basis. This is courtesy of Societe Generale, and what it's showing is that these late cycle narrow market rallies, when they roll over, what's everyone been expecting? Everyone has been expecting that this rotation is going to be a broadening out, and it's amazing how you hear the soft landing thesis, that it's different this time. It's going to be a soft landing, despite the record increases in interest rates and the record yield curve inversions. that 100% historically have been a signal of an oncoming recession and a market meltdown. It's different this time. People think that it's going to be different, that it's going to lead to that we're going to have a soft landing and a reacceleration. Well, we started to see this broadening out in the market when the Russell 2000 was going up on days when the Mag 7 were rolling over. But what's been happening in the past several days now? We've seen the breadth deteriorate as well, and so these normally the narrowing of the market, the lack of leadership in a few concentrated names and industries. In this case, it's been the Mag 7 is what is a signal of a top for the overall market. So this great rotation that we're talking about is not a rotation into everything else and a soft landing and a reacceleration of the economy. No, it's a rotation into a much narrower group of stocks, of value-based stocks. Yes, it's small cap is involved for sure, but we think it's commodity-led, it's natural resource-led, and it's going to be the leadership for the whole next economic cycle. And we're going to see this rotation into a much narrower group of stocks. Let's go on to the next. This is, another great rotation kind of chart that the media, that Bloomberg has been kind of touting this idea that the great rotation is a rotation into small cap, and they're showing the Russell 2000 here, the Russell 2000 value index. I like the idea that they're saying small cap value at least, as opposed to just small cap in general. But here's a look at what happens when at the S&P 500, which is the S&P 500 growth index, which is large cap growth, versus the Russell 2000 small cap value. So this is more the rotation that we're talking about, a rotation into small cap value. And it was a little bit higher, these two relative indices in the tech bubble, but it's the highest that it's been since the tech bubble. And you can see just in the past week or two that this relationship has indeed, it looks like it's peaked out. It's looked like it's starting to roll over in a significant way. This is how we're positioned at Crescat. We are short large cap growth and mega cap tech especially, and we are long small cap value, predominantly in the commodity natural resource industries, and especially in our activist metals positions. So let's go on to the next. So overall, now looking, we showed a similar chart last week from Bloomberg. This is also from Bloomberg Intelligence, showing it's showing the Mag 7 overall net income growth year over year. It's by quarter year over year, and the shaded box area, the 4 quarters on the right side, are estimates. So those are based on analyst projections. And what you can see is that the growth rate of the Mag 7 is most definitely decelerating, and this is the type of thing that makes tops. I just talked about how the spending for tech infrastructure, because of the AI boom, the AI euphoria, has been an unsustainable growth. I think we've seen it peak out already in the fourth quarter. We've seen that actual slight dip in the first quarter in growth rate, now expected to drop significantly in growth rate. This is the orange bar for the second quarter. And this is where we are in the cycle now. X Mag 7, here's this whole soft landing thesis. This everyone hoping that we're not going to be going into a recession and that we can have some kind of reacceleration of growth. But what's the true growth been for the X Mag 7? It's been flat to non-existent. It's been negative to flat for the last 4 quarters in a row. Do you think that's going to magically reaccelerate, or is this something that's likely to continue to get worse as we see this Mag 7 deceleration and this not this rotation into everything else but Mag 7, but a much more narrow rotation into a narrow group of stocks, much more like we saw in the tech bust. Let's go on to my final chart here. And Apple Computer. So what has been one of the biggest drivers of the latest market rally? It's been this whole idea that Apple is going to come out with some new AI features on its smartphone on its smartphones is going to drive an upgrade cycle for Apple. It's been the whole story as to why Apple has reaccelerated here and pushed to a new high. But so Bloomberg did a survey. What are the reasons why you would upgrade your smartphone and your iPhone in particular? And this is a current survey, and here's where people are. Number one, the battery doesn't last long enough. That's the primary reason for upgrading your phone. Number two, I need more storage capacity. Number three, a better camera. Number four, a faster processor. Number five, better screen sight resolution. Number six, physical damage. The very last thing in this current survey is that people are going to upgrade their phone on their new device to get access to new AI features. So I think this is a new narrative that is going to become a little more that is going to play out in the market. We also have faltering demand is coming from China, of course, because of the geopolitical issues with China right now. So there's this hope. It's just pure hope of a major Apple upgrade cycle that's going to get a reacceleration going. When Apple is one of the two stocks in the Mag 7 that has already been in a in a negative year-over-year revenue, year-over-year comparisons now for 5 out of the last 6 quarters, I don't think you're going to see this growth acceleration. This is another problem, another setup here. I think for a peak in the market. This is the AI euphoria bubble. We have this thing that I call creative destruction. I didn't coin the term. It was coined by one of the Austrian economists back in the early 1900s. But it's a truth. It's a fundamental economic truth. It goes back to that first chart that we showed about major technological innovations and investment bubbles around those things. They're great innovations, but it's the unsustainable spending and hype around those new trends that creates the peak in the economy, the peak in the growth rates, and ultimately the recession and the market crash. So, I think we have a major market correction coming. It's a broad market correction, but it's going to be led by the Magnificent Seven, and it's a rotation indeed into value group, and but into a much narrower group of truly beaten up value stocks that are the hope for the whole next economic cycle. That's the natural resource sector. That's how we're positioned at Crescat, both on the long and the short side. I encourage you to really talk to Merrick, because I think the timing is excellent, especially for our global macro and long short strategies, where we have the short positions as well as the long activist metals and other commodity positions. But what a great time for the small cap mining stocks that we're invested in at the same time. So we're going to have both Tavi and Quentin speak next. I'm going to turn it over now to Tavi for his macro presentation.
All right, thanks, Kevin. Let's get started with a few things that I think are relevant here in this market, and I do think there's some significant changes going on in equity markets, and it feels like, for many reasons, this is the beginning of a bigger move. And main reason for this is, let's look at this chart. If seasonality matters by any means, in other words, looking at the prior 2 decades or 3 decades of data, and seeing how VIX, which measures the volatility of the market by looking at the implied volatility in put options in the S&P 500 over the next 30 days, essentially you can see that in the middle part of the year, we tend to see a pickup of volatility. So things tend to get a little dicey in the later parts of the year. It wouldn't be surprising if we have the same occurring or the same trend developing now. And you can see that there is a shaded green, or I should say a lighter green line that excludes the 2 parts of this, which would be the 2008 and 2020 periods, because those are big volatility events. So even when you exclude those, you still see seasonality actually picking up during the later parts of the year for volatility. So this is an important one because we're right at that inflection point where VIX starts to or tends to increase in terms of and we're coming up from very suppressed levels. If we show the next chart, as we can see here, we're looking at one of the most suppressed levels of volatility. So now what I'm calculating here, we're looking at the 2-year VIX. So instead of doing a 30-day implied volatility for the put options, we're looking at a 2-year or 24-month of that instrument. And you can see clearly, and we're looking at the SPY index, or I should say ETF, which is the S&P 500 ETF. And you can see clearly here, we've seen times when things also reach historical low levels in terms of volatility. And those are usually periods when you want to be hedging your portfolio because we're poised for a significant change in terms of risk and stress in the financial markets. And so this is essentially another way of measuring the risk for a downturn in the markets too. And I would point out that there are some credit spreads is starting to widen, which we haven't seen in a while, and credit spreads remain at ultra low levels. We're seeing the yield curve starting to steepen, which is a sign of recession. We're seeing cracks in the labor markets that we've been explaining in these presentations. We've had on the breadth of the market, if you look at cyclical industries that have been underperforming significantly, we've had numbers in terms of the consumer data showing deterioration. And mega caps are now, as Kevin was presenting, are starting to lead to the downside, which has been basically a market that lacked the real participation of other industries, and now we're seeing the actual leaders starting to fade in a significant way. And I would point out to what happened yesterday, or 2 days ago, which was the decline of the semiconductors industry. It was the worst day for the SMH or the SOX index that since the crash of 2020. It's always a good reminder that when you're coming up from record or near record valuations, fundamentally speaking, risk happens really fast. And now we have the Fed communicating rate cuts essentially, and people are seeing this as bullish when historically has never been bullish, which is not shocking in terms of the fact that people and investors tend to have a short-term memory and forget about the trends historically, in which when the Fed starts to ease monetary conditions, it usually is on the back of a very negative environment for the economy. And then on top of it, you have, in my view, what is the most important things going on too is the behavior of the market. You have treasury liquidity drying up, and you have the dollar not really appreciating in this environment. Let's go to the next chart. So in this next chart, you're just looking at the yield curve and versus the corporate spread. So basically leading the way to the upside. And you can use the yield curve in a lot of ways. And we think that we're going to see much more steepening in this spread of the yield curve from short term versus long term. In other words, a lot of people try to get too hung up on if it's going to be a bear steepener or a bull steepener. We don't necessarily need to have a view on that. I actually think both sides of the trade look very attractive. The 2-year yield, as I said in the prior presentation last Friday, I do think that there is a case to be made for what used to be called the T-bills and chill, to be made in terms of the short-term yields being very attractive at these levels. And then on the long end, the flood of issuances and the problems with inflation staying entrenched, and the lack of discipline on the fiscal side, I think is very reflective of the risk on the long end of the curve in the treasury market. So that is the blue line, and then you're seeing the white line is risk being measured in the corporate bond side. And so when you see that line increasing, it means you're seeing stress in the markets. And so the same way VIX has been significally low, the spreads have always also followed the issues in the markets. And so I think that that's also another instrument that will show issues if this is really the beginning of a bigger problem, which I would certainly am of the view that that's the case. Let's go to the next chart. Next chart showing the volatility of the small caps that Kevin was referring to. We've had a kind of a broadening out that people were saying about the small caps. And I want to remind you of everybody that back in the 2000s era, when we had the technology bubble, what really peaked first was actually technology. Technology sort of started to fade. And then we had a broadening out of the market or other industries. If you look at an equal weighted index for the S&P 500, it actually had another resurgence and caused the S&P 500 market cap weighted to retest the highs of the March 2000 in August of 2000. And that was the double top of the technology bubble. And then we peaked in decline. And this chart, you're looking at the volatility, the same VIX idea of the S&P. You're looking at VIX also for the small caps, and you can see the divergence between those two tend to happen as well, tend to precede big volatility events. So in my opinion, this is another way of sort of looking at a leading indicator for potentially seeing volatility picking up significantly. Let's go to the next chart. Here is a problem that certainly turned out to be an issue back in 2021, and today folks are saying that this time is different. Which is the inflows in large caps. You can see here throughout history, we don't tend to see this type of inflows coming into mega cap stocks and so forth and technology companies to the degree that we've seen recently. And, there is, we're pretty kind of far in that pendulum in terms of inflows of capital into this part of the market. And so it wouldn't be surprising if we see a shift away from this part of the market. Let's go to the next chart. Next chart is looking at the technology sector weight in the S&P 500, including Amazon, Google, and Meta. I think that's a fair way to be looking at this. It's over 40% of the index today. And actually, if you compare that with the tech bubble, we're substantially higher, 10 percentage points higher than we were back in the peak of the technology bubble. Also slightly higher than we were back in the 2021 peak as well. And, I think this is where you can measure how stretched things are. In my opinion, investors are sort of running out of ideas to justify these distortions and historical distortions that we have in markets. And at some point, this is what creates or sets the stage for a reckoning moment. And so, this is why I find it the risk-rewarding idea of investing in technology just seems, it far exceeds the risk far exceeds the reward, in my opinion, or the potential reward, in my opinion. Let's go to the next chart. Next chart now is going to start something that, look, I'm writing in the process of writing a letter back in 2020. I remember, calling actually Kevin and the investment team here, Crescat, from an airport where I was reading on a flight about inflation in the past, and I end up, forming this really strong opinion about inflation, how inflation was likely to, we're probably going to see a resurgence of inflationary forces in the U.S. economy. I've got plenty of things wrong too, but these are sort of incredible moments that change how assets behave and create this great opportunities, and that's really when it kind of really solidified this view about commodities and real assets. And then later on, I started to learn more about, back in early 2021, about the issues with issuances of treasuries, and which I think it's become much more of a known issue by market participants as of now. But back in those times, not a lot of people were really knew about that. In fact, I remember writing a piece on Twitter. Bill Ackman actually shared that piece and not too long ago, and to me, there's something else happening that could potentially be as big as those two changes in markets. Not only the resurgence of inflation, but also the upward movement in interest rates, and I think it's the depreciation of the dollar. I've been developing this conviction of that view, and it's predicated on the chart you're looking at. I think that's the single most important problem the U.S. economy is facing today is the federal debt net interest payment relative to GDP. And by the way, we're looking at net. So for those that like to be more conservative, that's the most conservative figure. You can see here there's centuries of data looking at this number. And the very final numbers are looking at the CBO, or the Congressional Budget Office, projections for 2034 of 4.1%, which tends to understate the problem, in my opinion. The CBO, as is well known, tends to really be very conservative in their projections. And this is a projection that also doesn't assume any recession in a decade, which I find it highly unlikely. And but notice another thing here. You can notice as well that 1940s time, the net interest payment relative to GDP was substantially lower, despite the fact that the debt problem was exactly the same as where it is today. And so, it gets to me. I start thinking about this. I mean, at what point do we see the Fed really stepping in and having its a change of mandate from inflation and labor market stability to making sure that the government will pay its bills? And I think we're getting close to that. I think we're getting close to what used to be a long-term issue is becoming more urgent over time. It's transitioning to become more urgent. And it got me thinking as well about one thing that it really created this divergence of the U.S. markets in terms of growth relative to the rest of the world, which has to do with the fiscal dominance. The fiscal dominance of the U.S. is something really important. The fact that the U.S. has the reserve currency status allowed the U.S. to also run bigger deficits, run a much more aggressive fiscal agenda. And I think that that's unsustainable right now. Given this chart, I believe that there is a real risk for this fiscal dominance coming from the U.S. relative to other economies, which makes me think about if we've had aggressiveness from a fiscal side. The biggest thing that really translated from that is growth, been a lot stronger than other parts of the world. But secondly, if you go to the next chart, you can see here that foreign allocators, or I should say holdings, allocators of foreign investors have been deploying a lot of capital in the U.S. So attracted capital to the U.S. because of that growth, that exceptional growth relative to the rest of the world, also attracted capital to come into the U.S., also making, if you go to the next chart, the U.S. markets a lot more frothy than other parts of the world. So you look at price to book, you can look at price to earnings, you can look at the performance of the U.S. markets relative to other places in the world, and you will see there's a big spread between the two, in which, in my view, if we do see this dominance shifting away, I think that that's going to also translate in a big change of these charts. The capital flows out of U.S. equities into other parts of the world. And that's why I think, the risk of investing in technology, U.S. equity markets, when you have all these other things that potentially look more attractive, and the potential also for the flows of coming out of, something that looks really stretched, in my view, it could be a very meaningful shift in the macro landscape. If we go to the next chart, another thing that is likely to cause is the change of the U.S. dollar. This depreciation of the dollar, to me, or the potential for that is probably one of the most important macro developments here. And you can see this if you look at the British pound, has started to show that. And I'm going to show you 4 more charts that look exactly the same way, but this is just the beginning, in my opinion. I remember looking at, presenting this to our own investment team, looking at the 10-year yields. And I remember that there were some yields in the U.S. curve, long historical trends. And the same thing started to happen globally. So we had, the U.S. started to move first, and then you start to see the same thing happen in Europe. The same thing started to happen in places like Japan. And I think that that's sort of the same idea here. If we go to the next chart, you can see Canadian dollar actually also not yet bumping into that resistance or going above that. But look, it's starting to show like maybe there's a potential of a bottom. If we go to the next chart, you can see the Peruvian sol, or the Peruvian currency, also doing exactly the same thing. If we go to the next chart, you can see that the South African rand also doing the same thing. These are not unique developments. They're all, in a way, interconnected in a large way. And what is, to me, even more important, notice on days like today, in which the dollar should be shining, and it's not. The treasury market should be shining, and it's not. And on top of it, you have one of the most aggressive interest rate differentials of the Fed versus other places in the world, particularly Europe and other developed economies. And still, we're not seeing signs of constant appreciation of the dollar versus other currencies. In fact, most of these charts that I just showed you looks to me like the dollar, or I should say other currencies, are starting to form a bottom, a historical bottom relative to the dollar. And I should also point out that usually when we have foreign currencies really appreciating relative to the dollar, it creates two important things. One, we tend to see foreign markets perform better than U.S. markets. Now, that would be unthinkable in today's environment. I just showed you a chart of the price to book of the U.S. markets versus the MSCI World, excluding U.S. And I think that that's, really one way to see that. The second thing that it tends to happen as well during periods where foreign currencies outperform the dollar is that real assets tend to do very well. To me, this would be the type of change that could cause this next leg up in gold prices, next leg up in silver prices, the next leg up in copper prices. I think it needs to happen on the back of a very strong tailwind on the macro side. And I think that's what it is. That's in the next 2 to 3 years. If I would point out to a narrative that would be all, in all media, financial media, it will probably be about the dollar. And this is not coming from a political view. This is not coming from, the end of the dollar view or anything like that. It's just from a macro standpoint, it looks to me like the dollar is poised and more is becoming more convincing that the dollar is likely to face a major depreciation relative to other currencies and also relative to real assets. The real assets portion, we've shared many of our views there, but I don't, for us, we've always had a very strong view about the dollar. This is a shift in our own views about how things are likely to play out here in the near future. Let's go to the next chart. I'll try to keep it short now. And the most important thing going on today as well, outside of all these things that I mentioned, is what's happening with mining stocks in the gold space versus gold. Gold is down close to over 2%, depending on the time of the day today. And mining stocks are not down as much. And I pay attention to those things because I think we're in the process as well of bottoming in this chart. And in my view, I think this will surprise a lot of investors because the skepticism tends to morph into opportunity, and this is a classic type of opportunity where you see a bunch of investors with one view, and then when they change their opinions, it usually translates into a change in market pricing and also a repricing of valuations in this industry that I think it's way overdue for having its day. And so I think that that's the case. And when I look at this chart, I am just tired of seeing lazy research of people saying, the main reason, Tavi, this doesn't outperform is because there's too much dilution. Mining companies, they don't make any money. Look, let's do a step up of research. Let's go to the next chart. Why in the world, if that's the case, why in the world are copper miners outperforming copper? That's such an important question. Are you not seeing dilution in the copper industry? Then Quinton can maybe talk about this, but to build a mine in the copper space, it requires a lot of capital, perhaps even more than a gold project. I don't think that has anything to do with that. I think that the green revolution has attracted capital to copper that is now spreading into other things like copper miners. But even if you go to the next, this chart just showing the consistency of copper miners relative to copper since the pandemic. And some people will say, zoom out. You can zoom out and you will see that there are other times that the copper miners have not outperformed copper. But recently, different than gold, we had this industry, in my view, showing the way for what is likely to happen with the gold space. But if you go to the next chart, why we're going to see that? Well, this is an interesting chart. And if you break down into operating margins of commodity producers, you will find that, yes, oil companies basically have become true free cash flow machines, which, by the way, 5 years ago, that was unthinkable. Nobody thought oil companies could make any money. And now they're one of the most profitable part of the commodity space. And that's just predicated also on oil prices relative to how much it costs to produce, obviously. And the same thing, in my view, will happen with other industries. And even from that perspective, if you look at a gold company versus a copper company here, slightly better margins, right? You can see there, slightly better margins. We're looking at median of most of the major companies that have over $1 billion in the Canadian and US exchange. And you can see here that even from that perspective, actually gold miners are slightly more profitable than copper miners. And so that doesn't really explain the fact that they have been underperforming. Now, after further questions, maybe this has to do a little bit with the reserves quality of those two industries. Still, I'm of the view that ultimately capital that is flocking into the gold space will also, speculation is driven into the other sides of the industry, and ultimately that should drive the prices of the miners significantly higher relative to gold as well, and become more of a lever play in gold itself. And so, I'm almost marking down the names of the people that don't think that's possible, because I think that will be a view. I've said this before. I think it's one of the most historically unsupported views that I've seen in my career. Because we've never seen this before. As we saw in the 70s and early 2000s and so forth, we tend to see the mining companies really lead the way to the upside. And I believe this will happen again. All right, I'm going to now pass it on to Quinton Haney.
All right, thanks, Tavi. Actually, before I jump in, help me out. What is the difference between a bear and a bull steepening?
Oh, you want to put me in a tough seat, and that's fine. The bull steepener is more of an inflationary trend. It's when the long end of the curve, the 10-year, the 30-year, and so forth, are making the steepening of the curve, become more pronounced. Now, the bear steepener is the other way around. Is when the short end of the curve is falling faster than the long end, and that causes the steepener to happen. So that's the difference.
So, like when the 2-year has been going down rapidly, that could be considered a bear steepener, right?
Yes, and I don't really like the term bear and bull, because it implies that a bull is actually positive and a bear is negative. But really, in the 70s, during an inflationary era, just to keep it short, there were bull steepeners that happened prior to a recession, and so it's just a sign of inflation, actually, of more of an inflationary
the bull part of it has to do with the bond market. So whether it's bullish or bearish for the bond market itself, the long end of the curve.
I see. Okay, interesting. All right, look, I'll stick to geology. Sorry. We talked about the programming that we do here recently, and I think given the need for people to hear updates more so than a lot of stuff, I'm going to kind of push the updates closer to the top here from now on, and then I'll work through. And then if I have like a new company to talk about or something like that, it'll be towards the end. So we're basically going to make you endure a boring geology lecture. No, till we get to the meat. No. I'm joking. But today I've got a lot of updates. So basically today is entirely updates. I haven't even told Kevin and Tavi that I didn't get to the point where I could put anything else in here, because I think I was at 30 slides and it was going too long. I got three-dimensional models to show too. So let's get cracking here. Let's go. So we're going to go straight into updates. Go to the next slide. Okay, this week Goliath had 2 news releases. I think it was just a week and a half ago or 2 weeks ago that they announced that they've started their drill program up at the Gold Digger project at Surebet. Okay, and yep, they hit the ground running. They basically drilled one of the, we'll call it the most aggressive drill holes that has been drilled on the, well, it would be the most aggressive drill hole. How about that? It is hands down the most aggressive drill hole drilled on the property to date. And why did they drill it? Well, because they did very careful modeling over the winter months, the off-season months, to look at the high-grade zone or area around Golden Gate and Bonanza that started to emerge over the past season and a half. And they really picked it apart. They put the structure together in a very cohesive picture all of these loads and stuff. And then they came up with a really interesting target. They wanted to test it, and man, did they hit? Okay, this is really exciting stuff. So they have hit a very robust zone. Starts about 650 meters down the hole. So, and the hole is fairly steep. So it's more or less at 650 meters vertically below the drill collar. But interestingly, it's above the valley floor. Okay, it's above the valley floor, so it's still like, it would be accessible from the side of the mountain. All right, but they hit what they have deemed the mothership feeder zone, MFZ for short, which contains abundant visible gold. And yes, the mothership is a razz on my commentary. I guess they felt my use of mothership maybe justified the name. But anyway, big VG intercept. Okay, this is not a little deal. It's actually in the vicinity of a drill hole completed last year, where they hit 9 meters, I think, of 32 grams per ton. Now this is a bit deeper. Okay, it's actually a bit deeper, and it does appear to be like major structural, potentially feeder type structure to the system. Very, very interesting stuff. Now, also in this hole, they hit a porphyritic intrusion. Okay, now, without going off into geology babble, okay, there has been great debate about how those deposits formed ever since it was discovered. Some people say, it's an orogenic gold system, and it does have some hallmarks of an orogenic system. But then they have a student at the Colorado School of Mines, KSERM again, the same group that I'm working with here, who's done some really, really, really good science. Okay, and in fact has dated the mineralization, like age dated the mineral. It is completely different than anybody would assume for this region. Okay, it's coming back quite a bit younger. Not sure the company wants to fully disclose all the details yet, because it is a bit of a proprietary thing, we'll say. But what they've basically found is there's a direct link between an intrusion that's generated this mineralization. Okay, that is pretty dang cool. In this drill hole, they hit porphyritic intrusion, so we know it's right there. This is a tangible evidence that the intrusion is there. They also hit a lot of what are sound a bit esoteric, but molybdenite, which is molybdenum. It's a molybdenum mineral. Moly is an element. Okay, molybdenum is an element. And they've also hit bismuth. Bismuth is another element. It's another metal in the periodic table. Okay, and moly and bismuth are very, very closely associated with intrusions. Okay, so the presence of these in abundance suggests that we are close to the mothership, hence the name. Go to the next slide. Okay, the company put together this diagram, fully schematic. I mean, this is just, a stab in the dark, but it gives you a sense of what they're working with. Okay, so first of all, we can see the profile of the mountain there. It is pretty steep terrain. They found the sherbet zone, the upper sherbet, basically by scaling the mountain up there with rock climbers. And since that time, they've drilled not only the sherbet zone and the lower sherbet zone, they've also recently found the Bonanza and the Golden Gate zones. Okay, but this new hole, 235, drilled down and actually tagged a new zone. It could be an extension of Golden Gate. Don't know for sure, but it is a nice, thick intercept with multiple intervals of visible gold. What does it tell us? It probably tells us that there's a lot more to explore even lower, because we're getting closer to that intrusion, but that's kind of where the gold-bearing fluids probably originated. So this is probably going to be the first of many holes that have to be drilled down in this regime. All right, let's go to the next slide. Okay, this model that I've put here is actually the orogenic gold model. And the reason I pulled it up is because in almost all models that you see on the internet like this, there is often drawn in here magmas that are kind of associated, especially with that deep level. in this system. Okay, and I think that this is kind of the regime we're dealing with. I think we've got a magma that, you know, you can see there's two magma chambers there, both feeding magmas up to a shallower level. But I think that's part of this picture. It's just undeniably part of this picture. Does it also have a bit of an orogenic flavor to it? Well, kind of, yes. It's hosted by shear zones, and the fluids appear to have exploited those mega structures. They're very fat structures, okay? So I'm going to say that we're in the regime of that red circle right there. That's kind of the general area where the whole sherbet zone formed. Now you can see depth-wise, we're talking about maybe 15 kilometers below surface. That's quite deep. It's like the polar opposite of, say, Newfound or Fosterville or something like this, where that's epizonal. That's basically shallow. This is deep. Now you say, well, gee, does that mean you can't get good grade down there? No. Actually, you can get very good grades, and actually very consistent grades in this regime. Okay, and the best example I can think of, go to the next slide, is a little deposit called Pogo, which is in Alaska. Okay, now Pogo it's northeast of Fairbanks, kind of in the same general Tintina belt and trend that, say, Fort Knox is in. Okay, so we know not too far away from Pogo, there's already an reduced intrusion hosted gold system, all right, which is really interesting. But here we have a deposit that has yielded a very high-grade mine. Okay, this deposit, you can see down there in the table in the bottom, that's out of Porter Geoscience, references at the bottom. But, you know, we're talking about several million tons of over half an ounce per ton, 18 grams. Okay, in fact, the more updated resource down there, which is 2021, we have 22 million tons of 9.4 grams. Still very good grade. Okay, this is what I think we're starting to see at Sherbet, and this, you know, when I say Sherbet, I'm talking about the whole enchilada. Okay, I think this is what we're seeing at the Gold Digger project. I'll say that. Okay, now the top two images, those are taken straight from Northern Star, some presentation material they had from a couple of years ago, shortly after they picked up the mine. We're looking down on a bunch of assays, and then the gray patches are basically the block models for the deposit. What you have there, it's a little bit hard to see, but you have kind of a series of lodes, nearly flat lodes that are all kind of stacked on each other. And that's what Pogo is. Okay, I mean, geologically, it's very, very similar, both structurally and genetically, like how it formed compared to Sherbet. Okay, now there is intrusive here as well. At Pogo, they found, you know, intrusions and suspected, you know, magmas that are probably linked to the deposit. So again, very close parallels there. Okay, go to the next slide. Now, the way to think of Pogo, everybody knows I love food. Okay, and food's my best analogy. All right, so the way to think of Pogo is baklava. Okay, think baklava. Okay, this is good. All right, so you in baklava you got the phyllo paper, right, and it's multi-layered, and then in between, every once in a while they took a little bit of walnuts in there with honey. Oh, yum! I love baklava. Anyway, you can see, think of the walnut layers as being, we'll call it the gold-bearing layers, okay? And then the phyllo paper is what's in between, all right? So that's what we're dealing with. We're dealing with a baklava, how thick it is, like, you know, is it 2 or 3 layers, or is it 20 layers, or whatever? We don't know yet. But every time they drill a hole a little bit deeper, they find another layer. So it could have a lot more layers to it. All right, let's go to the next slide. Okay, so what are the layers? Well, the layers are what we see in the photos here. Okay, so these photos, I won't go into the huge technical dive here, but you can see quartz veining, a bright white material. Sometimes the quartz is banded. There's dark sulfides scattered in some of that quartz. The quartz is basically the material that hosts the gold, the very high-grade gold. And they see visible gold. They see little specks here and there scattered through that quartz. The gold is often associated with the sulfide itself. Okay, so if if we're talking baklava, okay, the quartz would be the walnut layers, and then the black material around the quartz veins, that would be the phyllo paper on either side. Okay, but this is absolutely like if you told me, oh, those photographs are from the Pogo deposit, I'd be like, yeah, looks like it. Yeah, no, that's Sherbet. Okay, or this is the new VG zone they've hit at depth, and they see bismuth and other like moly and stuff like that in the sulfides in these veins. I am very excited. I can't wait to see what the assays return. Have no idea what it's going to run, but in the photographs they've sent out, a lot of VG. Okay, this is just one. I don't have time to go through them all, so let's go to the next slide. Now, last year, just as a refresher, okay, this was a zone that they hit sometime late in the season, I think it was. And I think they were kind of kicking themselves because they hit it late in the season and they really couldn't follow up on it. So I think that's one of the reasons they wanted to drill 2, 3, 5 straight away, just because this hole is pretty dang good. All right. But this hole hits 9 meters of 32 grams. And you can see way down there at the bottom, tiny print. But again, you can see the quartz veining with the sulfide up in the core rung sitting at the top. There's some close-ups showing the VG in the middle there. That's that baklava. Again, the white is the walnut layers. Okay, and the black is the phyllo paper on either side. And we're seeing multiple layers of this of the walnuts in these holes. Okay, if the hole that they just announced runs anything like this, I think the company's going to really break out in terms of the understanding about the system, the high grade feeder, the economics of like you're going to see this story really start to gain some traction because you don't see too many discoveries like this, guys, in this day and age. Something that could be a multi-million ounce deposit, could be. I'm not promising anything, this is my opinion, but it's also high grade. It demonstrates it has high grades. Wow. Okay, this is good. Go to the next slide. Okay, on top of that, they announced that they're going to be drilling at Treasure Island. Okay, now over on the right-hand side of this slide, you can see a map showing the Gold Digger project in whatever it is, yellow, I guess that is. And way up there at the top, way far to the north, this has nothing to do with Sherbet. It's way far to the north. And it's not too far from the town of Stewart. Okay, so it's closer to that side of well, it's close to the Golden Triangle, or might even be within the Golden Triangle. Anyway, they are seeing really interesting mineralization in that mountain-like thing that you see in the photograph on the left. Okay, that is basically a knoll that's sticking up, an erosional high that's sticking up through the glacier. That's a very resistant piece of rock. Sometimes rock is resistant because it's silicified. And my bet is the fact that rock outcrop there is still sticking up, the glaciers haven't scrubbed it away, may have something to do with the fact it's mineralized, right? So what did they do? Well, last summer, again, towards the end of the summer, they started to find pretty high-grade samples. Now, it was high-grade gold and copper. Totally different, okay? It is not Sherbet stuff. You got to erase Sherbet for a bit. You got to think about what this might be. Well, look, it's not 100% sure yet. Some science has to be done, and that's being done right now. But it looks like this is a VMS, a volcanogenic massive sulfide system. Why is that important? Well, the host rocks, the kind of the setting for this mineralization is in the same rocks that you would see SK Creek and things like that, okay, which is a bit to the north. It's like due north of here. Well, that's kind of interesting. Okay, so we already know in the Golden Triangle there's multiple examples. In fact, there's one, I think, north of Stewart called Red Cliff that Decade Resources or Mountain Boy or somebody has, where we already know as an analog, they're a VMS in this neighborhood. There's even suspicion that the Porter, Idaho deposit, which is near this Treasure Island, is also potentially a VMS. We also know over at Dolly Varden, okay, some of that is VMS. All right, so we have direct analogs in this area for VMS. Now these guys are going to go ahead and drill this thing. It's a bit daunting. You can see drilling a mountain sticking up through a glacier. That takes a few cojones, in my view. Good on them. There are times in life when you just got to get some answers. And I would normally say I'd like to see a little more science done and stuff here, but they've got a lot of samples. Go to the next slide that show that the mineralization is, there's multiple areas across this dome of rock that have pretty high grades. This is gold or sampling in gold equivalency. So it takes the copper, converts it to gold, and they presented it that way, which is fine. But it shows you that it's pretty broadly distributed through that. Now, what might they hit? I don't know. I mean, they might hit little pops and whistles of high grade. Maybe they hit the mothership. Maybe there's something really, really big here. Maybe they get enough information they can plan next year's drill program. I don't know what the outcome's going to be, but it is a really exciting target. Certainly very high grades. They have gold assays up to I think over 20 grams per ton, and they got very high copper too. I think over 10% in some places. So it's likely VMS, perhaps SK-ish, and it could be big. Okay, so this first drill program, will they make a discovery? No guarantees, but I don't know. We'll see. All right, let's go to the next slide. This shows you some of the hand samples they collected when they did channels. Okay, so they did the saws. They usually make 2 saw marks, and then they break out the piece in, that's left, the little ridge of rock that's left. They break them out. You can see the chalcopyrite in there. Holy cow, that's solid chalcopyrite. That's like super high grade copper. You can see the gold grades. I think that's something over 20 grams. Can't read it. Whatever. And then the copper is very high in those two. I think, up to 10% or something. Anyway, gorgeous looking stuff. Texturally, it looks like VMS to me. So yeah, I can buy that. Okay, next slide. Okay. Sorry. I got to share 3D model. Sorry. We're going to share a 3D model. We're going to go back to, hold on there. Let's see. Goliath or Sherbet for a second. You can see that?
Not yet. It's coming up, hopefully. Let's see. Nothing yet, Quentin.
Nothing yet. Huh. Let's try this. Hold on. Let's see. I think I must. I have to do entire screen. That's the problem.
Yeah, I don't see here either. So.
Okay. Just a second. Come on. Do the thing. Oh, for Pete's sakes. What is it? Let's try window. Enter. Come on. No. This is bad, Tavi. Bad. I have 2 3D
Hey,
models.
Quentin, if you're good, do it live, man.
It says your browser has blocked your screen. Blah, blah, blah. Why has my browser all of a sudden decided to be difficult? That's crazy. Well, guys, I don't have time to sit and fart around with it, so we're going to have to go back to the deck.
Oh, man. All right.
Unfortunately, I can't show you where those VG hits were with relation to previous drilling at Sherbet, but safe to say it's deeper. Okay, it's definitely deeper. That was the main takeaway. Okay, unfortunately, I can't show it to you in 3D.
See, Quentin, that's why you're a great geologist. You can't share your screen. You're proving my theory there.
You just earned the love of many geologists. Tavi makes fun of geologists that can't figure out how to share their screen on the Zoom calls we do. He's like, he
Those
must
are the
be
best.
He must be a really good geologist. He can't share screen at all. Oh my goodness. Okay, well let's go on to Sitka. Look, Sitka gave an update really on their drilling up in the Yukon. They've recently consolidated the RC Gold project. Think they did a fantastic job there. They now have a commanding position over a massive reduced intrusion system. It's got lots of targets, lots of gold. And right now you can see towards the middle, maybe just slightly above the middle of this image on the right, it says area of current drilling. Okay, so they're drilling up closer to the original deposit there. This is the Blackjack deposit. And gosh, I have a 3D model. This is so annoying. Anyway, they've extended what will probably be the high grade part of the system that they're starting to see there. They're starting to see significant extensions. Go to the next slide. Okay, before we jump into that, I got to show you where we are in geology world. Okay, so this is a reduced intrusion gold system, hands down. It's got all the bells and whistles. And I put the red circle on the cross-sectional view over there on the left-hand side at about 4 or 5 kilometer depth. Okay, that's about where these things format. There's kind of they can be quasi porphyry like too down there, like you can get porphyritic textures and stuff like that in the intrusions. I don't want to bore people, but that's generally where we're at. Okay, now the image over here on the right hand side is a plan view, and it simply shows the geochemical zonation outward from one of these reduced intrusions. Okay, the core area is usually gold with bismuth. Remember bismuth? I talked about it a minute ago. Tellurium happens to be another metal in the periodic table, and W, tungsten. Tungsten, okay? Well, in this news release, I'm going to point out that they also hit some arsenic-bearing veins too. Okay, so that means they have to be slightly out into the yellow. So I've drawn the little red circle there to show that they are right in the sweet spot where they have the entire gold bismuth tellurium part of the system, but they've also got still preserved cap of the arsenic gold part of the system too. I think that's fantastic because what it tells me is that what they're drilling at RC is probably a fully preserved reduced intrusive system. Okay, go to the next slide. Okay, this is the best I can do to show you where they're at or what they're drilling here. Okay, so they basically come in underneath some previous holes. We've seen some of those holes not too long ago. I think 57 and 58. Hole 62, deep. It's one of the deeper tests. Lots of VG showing up down there towards the bottom. Now, might it continue? Yeah. Okay. I don't know why they cut it off here. Whatever. I don't know, but that's pretty encouraging. Okay, that's like 150 meters where there's abundant visible gold in places. And then they even hit some up at the top too. So there's some leakage coming all the way up the top. I really, really, really like this. This is starting to look and smell like a valley type discovery. Imagine finding an entire valley type discovery with absolutely no erosion. In other words, the whole thing's left down there. And people say, "Oh, that's kind of deep." Well, you know what? You could do bulk underground mining, no problem, in something like this, especially with these grades. Okay, so doesn't bother me one iota. This looks really encouraging. Can't wait for assays. Go to the next slide. One of the things they see with the gold is, they see the gold, little grains of gold in the quartz, which is the gray stuff. Okay, but then they have these little dark areas, darker minerals, I should say. Guess what? That's bismuth. So it's probably bismuthinite or something like that. But it's also tetradomite, which is a bismuth tellurium mineral. Okay, too much geology. Sorry. Anyway, when I see that, okay, I'm like, bam, man, that's a smoking gun there, buddy. That tells you you're in a reduced intrusion. There's virtually no other sulfide in here too. Like it's gold with a little bit of bismuth and tellurium, and that defines a reduced intrusive system in my book. Okay, so they have the right stuff. Go to the next slide. This simply shows that they have veins, in this case on the right, in the porphyritic textured intrusion. See the speckledy rock there? They have a quartz vein there, and guess what? There's gold with bismuth and tellurium right there in that vein. Boom. That's a smoking gun if I've ever seen it. Yes. Okay, but it gets better. Go to the next slide. Not only that, but out into the rock outside of the intrusion. This is out into the sedimentary rocks. They've got veins, and they found VG, bismuth, and tellurium out in those veins as well. Okay, so the orange flags that you see there, or tags that you see, those are places where they've seen VG and quartz veins, even out into the sedimentary rocks. This is a powerful system, guys. This thing, it looks like it's tightly bound inside of a sedimentary package, but this intrusion was just sitting there like huffing and puffing and trying to get the gold out, and it was pushing that gold out into the little veins and fractures around this. But this, man, when I see this, I think there's going to be something really high grade somewhere. Like they're onto it. They're onto it. Okay, this makes my skin just tingle. All right, so all right, let's go to the next slide. And then this is an image showing some of the shallower mineralization, but interestingly, the veins here are dark. Okay, they've got actually arsenopyrite, which is an arsenic sulfide. It's not anything bad. Okay, I think it's just a little remnant of the cap, but basically it shows you that we are in the fully preserved, realm of an reduced intrusion. This is the stuff that it's just the remnants of what's left of that next zone, that next geochemical zone outward. So the rest, all the goodies should be preserved here, guys. Okay, go to the next slide. So I'm liking what I'm seeing there. Rackla had news out today, or this week rather. They've drilled at hit. Okay, so remember they got hit and peak. Those are the two main targets they're testing this year. This drilling actually follows up on an area where they had some big long intervals of kind of half-gram-ish assays in some drill holes last year. Okay, but they're trying some drill holes in different angles and orientations, here as well. Okay, which is good. Okay, where's my money at? Well, I think peak is going to be the winner. But anyway, this still looks very interesting. Okay, go to the next slide. Okay, the rock that they're hitting looks a heck of a lot like what we see at Snowline. It is kind of a speckly granite, darkish colored granite diorite, and it's got lots of quartz vein. In fact, that you could put that box of rock right next to some of the rock out of Snowline, you wouldn't be able to tell the difference. Okay, so I do think they'll get some interesting numbers back. I think they have 2 holes, 6 and 7. We'll see what the assays say. Maybe they get onto the higher grade part of the system. I don't know, but it's a good start. Let's go to the next slide. Okay, this week, Tectonic put out a video. The link is up there at the top, in which they talk about the targeting that they're doing. It sounds like a broken record because I'm doing reduced intrusion. Rah, 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 rah. Guy won't stop. Okay, but now we're in the Tintina Belt, way over in Alaska. But again, a reduced intrusive type system, the Flat Gold Project, and this has got to be one of the biggest reduced intrusion systems I have ever seen in my life. In fact, it's probably the biggest, maybe, and it's got a lot of gold in it. Let's go to the next slide. Anyway, they put this video out, and I thought I just grabbed a few slides from it to show. Look, you guys watching the video can watch over the weekend, digest it better. But I want to show some of the new targets. They tested down around Chicken Mountain last year, and they got good results. They got several hundred plus gram meter holes. But now they're going to test more this year. Okay, so they know darn good and well that there's gold over here on the right, the far right, at Golden Apex, Black Creek, and so forth. There's alluvial gold and also a few historic drill holes that hit gold up in that part of the world. Okay, so the company does have plans to test, step out and start testing some new things and really show this project has a world-class feel to it. All right, go to the next slide. Okay, this slide shows the list of targets. So these are basically the different intrusion targets they have, and there's 6 of them. And it gives you some stats on the size of the thing. Remember, we're at a fairly high level, so we're still kind of in that gold arsenic realm. But as they drill down, they're seeing more bismuth and tellurium. Okay, so once again, we might have fully preserved systems here. You can see the size of the intrusions there. They're easily evident in the blue. Think of like the blue over here on the right as being the intrusions, and they're kind of all strung together like a chain, like a snake of intrusions. But they all have their own expression. And then look at the gold that's come off. That's the placer gold, the alluvial gold that's washed off of those deposits. There's a lot of gold that's come out of those things. Okay, each one of those has, except for the top one, which the data is lacking, but each one of the ones at the bottom there has a ton of gold that's been derived from it. All right, let's go to the next slide. I don't know what Kevin, we lost him.
I don't know. His internet's very.
I know his internet's
unreliable.
he needs more copper. Yeah. So, look, they start by talking about Chicken Mountain. Again, everybody can watch this video and watch it for in detail. But, what really kind of attracted me or, made me start thinking, wow, what is at Golden Apex and Black Creek and so forth. Okay. This is a big, big system. And to give you an impression of how big it is, look, 1.4 million ounces of placer gold that's come off of this area. That's not chicken feed. Okay, that's a big placer district. Go to the next slide. And here you can get a sense of the scale. Over on the right are two well-known deposits. We got Fort Knox. We got Snowline. Of course, Snowline's a very high-grade deposit. Smaller footprint, but man, it's got a lot of. That's a good deposit. Okay, but you can see the scale in cross section. Those are those two deposits. Then bring it over here to the left, and you can see right away that the drilling at Chicken Mountain has already defined a footprint that could easily be, as big or bigger than either of those. Grades probably a little bit lower, but a gram per ton ain't bad. And when you got hundreds of millions of tons of it potentially, that could be a very good ending. All right. So we need to support this story. I love this story. And I think they're going to really demonstrate the world-class nature of it this year. That's my bet. All right. Go to the next slide. Okay. This slide shows one of the targets up further north. Okay. So it's called the Addit/Happy target. Okay. And again, when you watch this thing in detail over the weekend, you can see exactly where it is, but I think it's kind of towards the north end. You can see Chicken Mountain listed down there at the bottom, but this is a cross structure that they now think is very important. So they're targeting kind of the structural zone because there are really good historic grades in this area, but they also think it's important for the overall location of this deposit. In other words, they might find a mothership inside of here somewhere. Okay, so very exciting target. Go to the next slide. And then here we can see the alpha bolt. So this is a fair ways to the north. What I like about this slide is that you can see the lay of the land with the alluvial gold, and you can see where it's coming from. Okay, so in other words, look at that Flat Creek. 650,000 ounces of gold is washed out of there. Where do we think it came from? Well, probably that colored area. Okay, like that's a no-brainer. Okay, so there's an intrusion at the headwater of that creek, and that thing is just puking out alluvial gold. Okay, do I think there could be a multi-million ounce deposit here? Yeah, anything that generates that much alluvial gold has some chutzpah, and that's got something going for it. All right, so this is yet another area. We'll see some testing. Go to the next slide. And sorry, I guess that was it. I realized I was going way too over on slides, and I had to pull some right at the end before we got online. Okay, Fathom Nickel, jumping over to Gaukager Lake. Fathom Nickel has got out into the field, and they're doing pretty aggressive field program right now, doing XRF on soils and such, and really trying to expand the footprint of the mineralization they've hit to date. Included with that is an effort to map outcrops and such, so that they can start to put together a geologic picture for this target. Go to the next slide. Okay, this is, we'll call it an early stage map. You can see where they've hit ore mineralization, the red there towards the left, the black are the drill holes. Okay, now if you look at that legend over here, you can see the yellow and the orange are a rock called gabbro. Okay, well, in this case, the mineralization seems to be closely tied to that gabbro. What is it? It's a magmatic rock. It's a very what we call mafic rock, or even it can be ultramafic. and it originated from probably from deep in the earth, and in a place like the mantle where we can derive a lot of nickel. Okay, so odds are that is probably our mothership intrusion, and you can see yes they've hit nickel over here where the it's that yellow and orange phase of Gabbro is tucked inside that green. But notice that the bulk of the Gabbro is actually trending off to the northeast. Like the yellow and orange really opens up out there, and that's they've not drilled up there. Okay, but they've done um, XRF and whatnot across this. They're seeing high nickel, high chromium, and other metals. And I'm really hoping that this data that comes back starts to define some new targets that would also complement the EM targets that they define. I talked about those a couple of weeks ago. But, good boots on the ground work leads to discovery. These guys are doing a good job mapping and trying to and sorting out a picture of what's going on here. Let's go to the next slide. Okay, look, Red Pine has been a struggle. This company went through a catharsis, we'll call it. Unfortunately, the previous management appears to have falsified assay results over the past few years, which casts kind of a dark shadow on the whole story. The way I look at it, this project has had historic drilling going back many years, well before Red Pine and this previous management had it. So it doesn't make sense, that there's no gold there. There's gold there. It's just I think it was overstated, but I'll let others figure that out. But now they're kind of back in the saddle, trying to get themselves out of the mud, and they've started to see some pretty good results. Okay, like this headline hole, 2.4 gram over 39 meters, great hole, almost 100 gram meters. The map that came with it, I'm sorry, guys. I clicked on that sucker every which way I could, and I couldn't get it to blow up. I don't know why, but look, it looks basically like it's kind of in the heart of the Serluga zone. What does it mean? I can't tell because I can't see the doggone thing. I'm going to hopefully see better maps come out of the company, but it's nice to see them at least get back in the saddle and get going again. And I hope they can pull themselves together. Okay, go to the next slide. Okay, Nevada King announced the discovery of near-surface oxide gold, and this is east of the Atlanta pit this time. So in the image that you see over here on the right, we have the pit right along the left-hand margin of that slide, and then this orange sinuous thing that you see running through there is this East Ridge target. Okay, it's very steep country there, and the rocks step up. Okay, so they go bloop, bloop, as you go eastward. So this is the first step up, in my view. Okay, and that ledge, basically they drilled some holes, and they found that some of the mineralization they see down at the Atlanta pit is actually stepped up. So think of it like, it's stepped up, boom, like that, a little bit. Okay, that's great. That's great. And there's probably potential for some easy hanging, like a low hanging fruit here in terms of oxide gold. But I'm thinking about the next step over. But anyway, we'll get to that. I won't ruin the punchline. Go to the next slide. Okay, here's a cross sectional view. The orange band that you see going across here, that is the gold mineralization. If we were to continue this cross section down slope, we would be in the Atlanta pit. So basically, again, like I said, it looks like this is stepped up. Okay, it's moved up above the Atlanta pit. It's the one, and you can see the red interval. That's the drill highlight there. It was a few tens of meters, about like a gram or so. But it's the one to the east I'm interested in. So go to the next slide. So if you look at this jumbo target, which is the big orange blob that I put the red arrow on, that's the one I'm quite interested, because if they hit there, like if they see this same mineralization that they found in East Ridge, jump over to the jumbo area, that could be big tonnage. Like that could be a lot of rock to add to the story. So we got to sit tight and we'll wait to see what happens. Now, I had one more story I need to talk about briefly. I didn't have slides of it. And to be blunt, at Crescat, we can't talk about financings and stuff like that. It's not our role, and it's not something we do. It's up to the companies to decide what they have to do, what's best for them. But what I can say with Lion One, it is a heartbreak to see him have to go back to the market like this and get the absolute crap beaten out of him. Looking back at the most recent news they've had over the past few weeks, they have demonstrated that they're seeing increased production. Okay, like if you look, they kind of got through the development rock into stopes, and now the grade's gone up. Grades are probably trending north of 5 grams now, hopefully moving up from there. The ounces are coming in with it. I think in June they did a little over, 1,500? 1,500 ounces. And, the trend looks like it should go up to 2,000 plus ounces, hopefully. Okay. The company has to get there, guys. There's no other way to put it. I can't harp on, things. And I wish this was a better market too. Really do. But it is what it is. I'm rooting for the team. Got good friends there, and I love to see them succeed. I know they want to get down to that rock, that high grade that they've hit in recent years. If you think back to 2020, when we hit the 500 zone, whatever it was, 12 or something meters of 50 or 60 grams, can't remember now. You think about that, and that's the kind of stuff you want to go down and start targeting as quick as possible. But to get there is a different story. You got to get down to it, right? It doesn't happen by magic. So, look, I guess from my view, the company is on the right trend in terms of the increased tonnage through the plant, the increased grade that they're seeing, the increased resulting ounces that are coming out of the ground. And I hope to heck that this is the last time they ever have to raise money. But it is what it is. Okay, Tavi, all yours.
Good stuff, Quentin. All right, everybody. Well, look, Kevin had to probably be for trading purposes as well. If you enjoyed this video, please subscribe to this channel. If you have any questions about Crescat, I do think that there is an important turn happening in markets right now, and I think that it's certainly if it got your curiosity about what we're doing, I would say talk to Merrick. He would be a great way to understand better about our funds and how we're positioned for the following years. And so I do think Crescat is well positioned for this market, and therefore why we've been doing what we're doing. And so days like today, I live for days like today when gold is getting beat up and you have to just put your long-term hat and pay attention to the long-term trend instead of being too focused in this day-to-day declines and upward movements in asset classes. So we'll be back next week with more. If you want to be notified of that, all you need to do is just follow our channel on YouTube, and you'll be able to get notified of our new and upcoming videos. But thanks everybody for watching. Thanks Kevin. Thanks Quentin. And see you all next week. Take care.